morning. Happy New Year to all. Mark Soderberg with ADM Investor Services with your morning ag market outlook. Before we can enjoy a festive New Year celebration, however, we do have one abbreviated session to get through here in 2024. 2024 began with spot corn prices near the $4.70 level and appear they'll end the year very close to $4.55. In between, we did see prices dip to a low near $3.60 back in August with a high of around $4.70. Beans began the year pretty much near their highs at $13 a bushel, trading all the way back down to just below $9.40, now rebounding back to that $10 level as we close out the month of December. Oil prices pretty much range between 40 and 50 cents all year, ending the year at the very low end of that range. Meal prices spent 2024 between $280 to $390 per ton. Wheat started out the year near $6.30 in the spot Chicago contract, made a spring high of very close to $7.20, only to fall below the $5 level by late summer. As we close out the year, we are very close to that $5.50 level. The CFTC did come out with their commitment of traders report yesterday afternoon. Money managers were net sellers across the ag space for the second consecutive week, selling nearly 42,000 contracts. This reduced their long exposure in the ag space to 82,536 contracts, this being their smallest position now in 2 months. They were net sellers of another 7,400 contracts in the soybean meal. This extended their record short position now out to 96,371 contracts. They were also net sellers of just over 22,000 contracts of oil. This flipped their position now back around to be a net short for the first time in 3 months. There are also net sellers across the all three classes of wheat. Actually, modest buyers in Minneapolis, but net there were sellers of just over 9,000 contracts. This extended their short position combined to 157,000. That is their biggest short position in the wheat complex here in the 8 months. Index funds are also sellers in the ag space here for the second week in a row, reducing their long exposure to the lowest level now in 2 months. Later today, we will get a report from the EIA, their monthly biofuel capacity and feedstock update, showing how much biodiesel and renewable diesel was produced in the month of October, along with showing how much soybean oil and other feedstocks were used in the production process. Heading into 2025, still much uncertainty on biofuel mandates and tax credits with the incoming Trump administration. One thing I think pretty certain will happen, however, is increased tariffs on used cooking oil imports from China. Weather-wise, dry outlook in central Argentina, stretching east into southern Brazil, something that will be monitored very closely by the trade as we get into January. So far, crop stress has been minimal, however, could quickly change without follow-up rains in these drier areas by mid-January. As we hit closer to the pause here, corn is 2 to 3 higher. Still an inside trade, however. Next resistance for March corn above the recent highs comes in at 468. Beans 3 to 5 higher with the March contract holding just shy of the $10 level. 50-day moving average is also just above that $10 threshold. 100-day moving average clear up near 10.20. March oil can't seem to shy too far away from that 40-cent level. Inside trade for March meal with prices about $3 to $4 higher. Also inside trade overnight for wheat with prices tilting 2 to 4 higher. Wishing everyone a very happy and safe New Year. Let's bring on 2025.